REIT stands for a real estate investment trust. Usually these companies are large, publicly traded companies that have shareholders as owners of the company. They also receive special tax treatment when it comes to how their income and expenses are qualified by the IRS. How do REITs fit into the whole ecosystem of a self-storage investor? Well, the REITs are usually going to be your top dogs. They're going to be the guys at the top of the food chain. They're usually buying the largest assets, 10, 15, $20 million a piece, if not larger. And they're usually buying at very low annual returns or cap rates. They're usually buying in the 4.5% to 6% range. So how do I work with REITs, or how do I work against REITs? So REITs are actually not something to be afraid of, and they actually can work in your favor. Typically, REITs will drive the market. These are the guys that have a ton of marketing dollars and spend all their time doing, market segregation studies and looking at, what is the max amount of rent that can be paid, by an individual tenant. And usually as a smaller operator, what you can do is you can piggyback off of their marketing dollars and just undercut them on price by maybe $5 or $10 and actually steal all of their traffic without spending any money to acquire that traffic. Another thing you can do to work with REITs is actually build for them. So REITs, just because they are publicly traded companies and they need to return, a solid 3 or 4% to their shareholders, they usually shy away from a lot of risk. So as an operator, what you can do is actually build these large REIT grade facilities, these 80 to 140,000 square feet facilities, stabilize them. So get them up to 90% occupancy. So now all the risk is gone, and then sell them off to a REIT.